The global pandemic has thrown the healthcare sector into a vaccine-finding frenzy. Today's ETF battle features the ARK Genomic Revolution ETF, ARKG, versus the Vanguard Healthcare Index ETF, VHT. Which fund is better positioned to capture the growth in healthcare sector? Well, stick with us. You're about to find out. Welcome to ETF Battles. I'm Ron DeLegge. The global pandemic has thrown the healthcare sector into a vaccine-finding frenzy, and we've got a big league matchup, ARKG versus VHT. This is another viewer-requested matchup, and it has all the makings of an instant classic. By way of reminder, you can download an ETF Battle recap of this episode. Just hit the link in the description section below. Be sure to subscribe to ETF Guide TV, and if you'd like to see a certain battle matchup, post it in the comment section below or on our Twitter feed at ETF Guide. Our battle matchups also now include mutual funds. So if there's a mutual fund to ETF matchup you'd like to see, send it our way and we'll consider it. COVID-19 has put the healthcare sector back in the spotlight. But aside from vaccines, there's lots of other promising therapies like DNA sequencing, stem cell research, and a whole lot of other stuff that most of us don't understand, but that's good for humanity. And investors are hoping it's going to be good for their wallets. So ARKG versus VHT, both of these ETFs invest in the healthcare sector, but as you're about to find out, they do it quite differently. Keep in mind, ARKG is an actively managed ETF, which means it's trying to outperform both its peers and corresponding indexes, while VHT is strictly indexed. So helping us to judge today's battle, we've got Todd Rosenbluth, Director of ETF Research at CFRA, and Dave Nadig, Director of Research at ETF Trends. Guys, great to see you again.
Thanks for having us.
Good to be with you again, Ron.
So we've got our four battle categories: cost, exposure, strategy, performance, and then the mystery category. Now, that mystery category, by way of reminder for the audience, that's where the judges get to pick whatever factor or multiple factors that they think are important to today's battle. So we'll find out in just a bit what our judges have chosen. Now, my scorecard is ready. It's blank. And we're going to go through each of these four battle categories one at a time. Our judges are going to pick ARKG or VHT as the winner in each respective category. They can also opt for a split decision. Sometimes I forget to mention that. And if neither ETF, in their view, has an advantage over the other, this particular episode, this battle could end in a split decision, but we'll just have to wait and see. So the first category is cost. And Dave, you've got 30 seconds. Go.
Really a pretty straightforward one here. These funds couldn't be more different. We've got VHT here with a very Vanguard-like 10 basis point cost, about as cheap as exposure gets in the US market, to be honest. On the other hand, we've got ARKG, which is at 75 bips, which is about as expensive as ETFs get. So we're really anchoring almost both ends of the spectrum on cost here. There's no question in my mind, you just have to hand this to VHT. We'll get into the other reasons later, but on cost, it's a clear winner.
All right, that's a strong start. Todd, how do you see it in terms of this battle category?
So I'll add an additional cost in favor of VHT. It just trades more, even though the volume has been picking up with ARKG and it's actually been picking up in the last couple of months. VHT has been consistently trading relatively tight from a spread perspective, trading consistently in line with its net asset value, whereas an actively managed ETF, obviously there are going to be changes in the portfolio and that net asset value is not a guarantee day to day for it. So VHT would be the winner. Again, the biggest cost savings is the expense ratio.
Let's move next to the exposure strategy. Todd, you're still up. How do you see it?
Boy, so you've got New World Healthcare with ARKG, with Genomics, and a lot of molecular biology related stuff, things that I didn't do very well in terms of high school and in college related, whereas VHT, it's pretty straightforward. You're getting pharmaceuticals, you're getting biotechnology, you're getting managed care, you're getting medical device related companies. These are just core parts of the healthcare system. So whereas the new age is likely to have some success, there'll be success and there'll be failure and there'll be winners and there'll be losers. And even though I believe in active management and believe in Kathy Wood having success in doing that, VHT is what you think it is. It's the market cap weighted healthcare sector with large, mid, and small caps, I like knowing what's inside and understanding that it's going to be there consistently. So VHT would be my winner, but I certainly understand why folks are focusing on ARKG.
All right. Thank you for that analysis. And Dave, how do you see it in terms of the winner and exposure strategy?
I would actually make the opposite case for the same reasons, right? So yes, VHT is giving you exposure to healthcare and companies and insurers, and CVS is in there and Walgreens. I mean, come on. Are these really the companies you want to be investing in right now? If you're focused on the healthcare sector, I think some of these stocks are going to get slammed over the next 4 years as we inevitably have to reimagine what the healthcare system even looks like. On the other hand, ARKG is focusing on some of the most interesting companies in the biotech space right now. They're not even in the same universe to me. And in terms of which one I think is more interesting right now, I've got to give it to ARKG.
Okay, very good. Let's shift now to performance. And Dave, you're still up. So who is the battle winner between ARKG and VHT?
Well, the dichotomy here is even more profound than it was on cost, where over the trailing 12-month period, VHT has done quite well. It's beaten the S&P 500. It's up 24%. Of course, ARKG is up 214%. So they're not even playing in the same universe. If past performance was any indication of what you should do, you wouldn't even be looking at VHT. It's got to be ARKG.
Okay, very good. How about you, Todd? How do you see it in terms of performance between these two ETFs?
Yeah, I mean, the numbers are the numbers. ARKG has historically outperformed. It's been a relatively short window. It hasn't been around a long time. And again, active management, you don't know what they're going to own, and they're increasingly seeing inflows, so they may not be able to continue to buy what they have owned in the past. So the future performance is perhaps more susceptible to not repeating itself. And you certainly shouldn't expect 200% again in 2021. But yeah, ARKG,
oh, come on. Don't be such a pessimist.
ARKG is the winner in terms of historical performance.
Yeah, you don't hit a lot of triples every time you come to bat. Like that's just not normal.
Exactly right. And we forget that sometimes as investors, and it's a good reminder. Thank you, judges, for pointing that out. So our mystery battle category is up next, and this is where our judges can pick that one factor or multiple factors that they believe are crucial to today's matchup. So Todd, you're still up. What is your mystery battle category and who wins it?
So folks that have tuned in beforehand know we at CFRA have a proprietary star rating methodology on 1,900 ETFs. VHT is a 5-star rated ETF, in part for its low risk and in part for its reward potential. And we already touched on cost. ARKG is a 2-star rated ETF. We actually think it is going to significantly underperform, not significantly, but underperform the broader category of sector ETFs as we look forward to the duration of 2021. I'll use that baseball analogy even more. This is a fund, ARKG, that is swinging for the fences. It's going to strike out. There's greater tail risk that's there. We think VHT from a mystery battle category, which is no longer a mystery, it's CFRA's 5-star rated VHT is the winner.
All right. That's solid analysis. Thank you very much, Todd. What about you, Dave? What's your mystery battle category and who wins it?
I have to imagine myself thinking as an investor, part of the reason I'm interested in this battle is because of the wow factor. We have all of this external information about what's going on in the world. We want a fund that's giving us that something extra. I think VHT is frankly just too boring for most investors who are really looking for a sector play to really profit from changes in the fundamentals of the economy, which I think is what the point here is. So my category is wow factor. I think ARKG wins handily here. I'm going to throw a wild card in here too. If you're really interested in wow factor in this space, check out the Principal Healthcare Innovators Fund, BTEC. It looks for healthcare innovators that aren't even making money yet. This is just development stage companies. So if you want to go really far out on the edge, BTEC is probably where you want to end up.
All right. Very good. Thank you very much, Dave. So now your overall battle winner, this is where our judges get to recap their overall pick. So Dave, you're still up. Who wins the battle?
You know, I'm reluctant to give it to ARKG because I feel like most investors are probably not ready for that much risk. So I kind of want to make this a split decision because, to Todd's points, VHT is what you see on the tin, right? It is giving you that broad exposure to an entire chunk of the economy. So for what it's trying to do, it's the winner. But if what you're trying to do is chase that wow factor, I think ARKG is the winner. So I'm going to be difficult and I'm going to split my decision there.
Okay, thank you very much. Todd, how do you see it? What is your decision? Do you agree with Dave's split analysis?
No, I'm not. This is not. I mean, I understand why this is a debate. This is ARKG was up 200%, and Kathy Wood is the darling of the ETF industry, and this fund has been pulling in money hand over fist. But VHT is the better product. It's a consistent, steady Eddie, cheap, well-diversified healthcare ETF that we at CFRA happen to think will outperform in the future because we feel like the future is going to be different than it was in the past, and the performance is not going to be repeated with ARKG. ARK has some great products. We do like, have higher ratings on some other ETFs. It's not that we're against active management in the ETF space. We just think VHT is the winner.
Well, thank you so much, judges, for weighing in. And according to my battle scorecard, this is a split decision between ARKG and VHT. Our judges agreed on cost. VHT won on that front. In terms of performance, ARKG easily outperformed, at least on a historical basis. What it'll do in the future, nobody knows. And then pretty much across the other categories, our judges had differing viewpoints. And we come back to you as the investor and a member of our audience. What do you really want? And so when I take a look at this battle, if you're looking for broad coverage to the entire healthcare sector, clearly VHT does the better job of that. On the other hand, if you're looking for more concentrated exposure, or as Dave said, the wow factor to those stocks within the healthcare sector that are the most innovative and maybe the much smaller companies that are investing and doing lots of R&D in emerging areas within healthcare, well, then clearly ARKG would probably be the better choice. But nevertheless, this was a great matchup, and we gave you a lot of solid analysis and solid points. And I think you can add that to your research in determining which of these ETFs might be best for your portfolio. Well, thanks for watching ETF Battles. Be sure to subscribe to ETF Guide TV if you haven't done so already. Which battle would you like to see in the next episode? Give us your ticker symbols. Do that in the comment section below or on our Twitter feed at ETF Guide. Also, don't forget, we also offer battle recaps. So if you'd like to get your battle recap for today's episode, just hit the link in the description section below of this video. Well, that does it for ETF Battles. We'll see you next time. I'm Ron DeLegge.